Welcome everyone. My name is Lars von Thienen from the Foundation for the Study of Cycles, and welcome again this Monday to a session on cycles. Let's discuss and check some market cycles as we do every week on Monday this time. So what's up for today? I have one key topic, two additional topics I want to discuss with you, show with you. The first one is about intraday cycles. We did a session on the Dow Jones 2-hour chart in April, mid-April, and there was a high interest in doing these intraday cycle analysis. So therefore, first of all, we did an upgrade now. So the intraday time frame projection zone and the aggregation into the future is now available, which makes the forecast more interesting. So therefore, let's revisit the intraday forecast we did on the Dow Jones 2-hour chart. Let's take some lessons learned out of it, how to read this kind of forecast, and to show how the projection time zone on intraday time cycles now looks like. So this is the first topic. The second topic, as often, I want to highlight and showcase a great example out of our ideas section from a member, combined with a forum post, which makes it now very interesting, not only to see the cycle study, also to discuss the follow-up analysis, which is continued in our new forum section. So this is the second topic for today. And the third topic, it's just a quick one, but I have updated the National Association of Active Investment Managers and their exposure index. They provide this kind of data set, and we did also some cycle analysis back in February this year. And I want to update this analysis with you and see how the cycles worked even on this sentiment kind of data set. So these are the three main topics for sure. And as always, at the end, I will pay attention to your questions. So feel free to drop in all your questions in the live chat. And I am happy to see. So hi Bernard, hi Mark, hi Mahendra. So nice to see you here. Please post your locations from where you are so that I get a feeling with whom or with which places are connected right now. This is always interesting. Okay, so that's the agenda for today. So we keep it around 30 minutes as always. And the key topic is our first topic, talking about intraday cycle analysis, which is a very special subject, by the way, anyhow. But as we have the ability to apply cycle analysis to all kind of data sets, why not analyze intraday data sets? We don't provide intraday data as an data feed, you know that. So it requires that you upload your own intraday data sets upfront. So you can put that. And let's get back to the review I did in April as a starting point on the Dow Jones. So let's get it started here. So maybe you remember, so this was the cycle session we did back in April. And I just recommend that you also might review this session here. I just highlighted here, it was the market cycles report on the 12th of April. And I reviewed a lot of cycles on the Dow Jones Index, but just to highlight here around minute, minute 20 something. I showed you how to upload, or I did upload a 2-hour chart on the Dow Jones Index. We did review some cycles, how they worked in January and March. I also explained that there seems to be a prominent cycle around 87 and 119 on this 2-hour time frame. So that was the review we did back in April. And I also did a forecast back in April. So now I think it's a good time to review how this forecast worked out. As this was a live session, I just want to get forward to where the forecast is. Here's the forecast, and it's minute 27 in this session, so you can review it on your own. And I will recall now this forecast in our cycle scanner again. I just want to remind you that this was a live session on that day. So, and you see on the right hand side, this is the projection we did at this point in time. So this is where we are on the 12th of April, and we projected here maybe this path just based on cycles for the Dow Jones and on the 2-hour chart here. So as this was live, so let's review our own projections here, and let's learn from it. It's nothing about to hide. We want to learn from these cycle projections. So now I will recall this cycle analysis as an idea, and I saved this analysis as an idea, so you can load exactly this idea on your window now. And even if you're not a subscriber, the ideas section is a public section which is available to everyone who is just visiting the foundation. So therefore, feel free, try to check this idea, Dow Jones 2-hour cycle study. It's still there. So this was based on the session in April. I just want to open this 2-hour chart to repeat this analysis and take some lessons learned or some lessons. So this was exactly the same data set on the, it was ending the 9th of April, so Friday, the close of Friday. We did the Monday session. We saw these two major cycles here. Again, important here to remember, we did an analysis during the full first quarter of the year of this data set, and these two cycles appear again and again in this data set. Why they are on the top of the list here, you see they are the strongest cycles in this 2-hour chart here. So the strongest cycles means they also clearly stand out in the spectrum. Just to repeat for our first-time visitors, we choose the cycles which have the highest impact on the data set we are analyzing. Highest impact can be seen by the peaks in the spectrum here. So if we see clear peaks in the spectrum compared to the other peaks, these would be then the cycle length you pick here. So on the x-axis you see the length, and on the y-axis there's the amplitude. If you don't see clear peaks in the spectrum, you should not treat cycle analysis in this data set. But if you see clear separated peaks in the spectrum, as we do here, we can use it to do some cycle analysis on this data set. So that's why the lengths of 117 and 84 show up. They also have green triangles, which means that's the statistical significance due to the Bartle score can be trusted as a second validation. And the size of these triangles is very high, which means that the strength score, so the strength compared to the other cycles, is very high. So all three criteria we use to define if we should choose a cycle for doing projections has been met. They are also on the top of the list here. They have been selected in April based on these clear reasons, so there has been no cherry picking or no special reasons why those have been picked. There's a clear rule set outlined. Yes, and this would have been or has been the exact same forecast what you now see here as we did this 4 weeks back. And now I think it's a good time to revisit the cycle projection and check it out. So the first important topic and point I want to make and talk to you, if you have watched the session 4 weeks ago, you know that the cycle scanner was not prepared to do exact timing projections on the forecast period on the time axis, because it was always taking account continuous time, which means if you upload intraday data, the 2-hour has just been taken as continuous time, which means that during the night, during the weekend, these 2 hours would have given us a new data point in the projection area, which would be wrong, because we're dealing here with 2-hour bars just in the trading hours, which means it gives you 4 bars or data points a day, and then not during the night. So just during the trading times where the stock market is open. So that was the problem. I mean, the cycle has been still the same. So from the cycle projection, there's no change in that. So the algorithm and the projection has been not touched at all. And you could even have counted the bars in the future when to expect, for example, this bottom here, which I will review with you in a second, and this top here, which I will also review with you in a second. However, and as you see here, I've not adjusted the x-axis, and now you are able to do that. So that's the first important point here, so that we have now put a lot of effort in the maintenance and the application that we now can support intraday forecast and do the right time aggregation, which is not easy. As you know, there are different timing topics to take into consideration. So this is how it looked like in April, as we just used continuous time, and you see here it's just moving into the future without taking into account that there's not every 2 hours a new data point. It's just during the trading hours. Now, even though the cycle projection is the same and will not change, so you could have counted the bars into the future and then correct the timing, we can now do this via the configuration panel. And there is a new tab available, which allows you to deal with intraday data, which is now part of the upgrade, which has gone live. So if you're interested in more and more intraday analysis, I think the upgrade is something for you. So the session tab now allows you to give individual information about the trading session and the intraday trading session of the data set you are analyzing. So this then gives us the possibility to do right time aggregation for the cycles, even in the projection time zone. So the time zone and the trading session depends on your local time zone and the upload of your data sets. So in my local time zone, the Dow Jones starts at 1:30 with the first trading bar, and ends at, also last data point is given at 7:30. So this depends where you are located, how you upload the data set. So this is not the stock market data hours. This depends on how you defined it during the upload. So you need to correct this against this. So my trading times for these 2 hour data set, this one here. So I update this, and you now see that for sure the cycle projection has not changed at all. It's still the same, but now if you have a close attention here on the time scale, if I move more to the right here, you see, for example, that the last bar will appear at 19:30, and then on the start of the next day at 1:30. So it now correctly takes into account just the trading session times and not the breaks during the day. So this allows us that the time projection into the future now gives us correct indication based on the time aggregation when we should expect the cycles to get the next bottom or the next top. So, and this is important, as you don't want to count the bars manually and convert it in what does it mean in trading session. This is too much manual work. So we have now taken this into account. And you just need to put in the trading session so that we have the start and the end of each trading session. And the dataset upload takes care about to know what bar size did you upload, and everything else is done automatically. So that's the key point I want to highlight today, so that you're now able to get correct intraday time frame projections based on this. And so therefore now let's get back to what we did in April on the Dow Jones. As I said, the same cycles, we just now have the correct timing here. So and please review the video so that you see I've not changed anything here. So how do we read this kind of intraday cycle? Because this is now also an important takeaway. Lars, what am I doing now with this kind of cycle projection? How should I read it? What should I take out of it? So therefore, I will spend some time to give some insights how to use this kind of projection. First and foremost, and I've repeated this every time, but you need to be aware of that. This should not be read as any kind of amplitude price projection. So cycles don't project the magnitude of the next move. So even though from a visual perspective it looks, we should expect a massive down move just looking at the amplitude here, and a massive upload looking on the other amplitude here. These amplitudes are not equal to the real price behavior. So therefore, never read this kind of cycle projection. Now the price will go down to 29,000 index points. No, cycles do not do price projections. Cycles are read in times of timing. They give you a kind of guideline in regards to the time parameter what you are interested in. So therefore, you look out for the next important turning points. When do they occur on our projection line? This is what you are interested in, and this is what helps you then adding another analysis or doing other stuff with that. So we look always on the next turning points from our projection line. So choosing these two important cycles, I have explained this 4 weeks ago. But we look out that maybe, and I can even make it a little bit larger here, so that on the 27th, 28th April, yeah, you see it here somewhere during the day. We can't exactly project the bar during the day, but on the 27th or 28th of April, yeah, this is where we could expect the next upswing to start on an intraday analysis. From the point of the analysis, so it was Monday, 12 April, we would not expect price to go higher. We could even see a correction until the 27th April. So this is how you read this kind of forecast, and never go much more longer into the future. I mean, you can plot this cycle forever into the future. Yeah, that's not the problem. But please never read this projection as a static projection into the future, because cycles will change their behavior, their characteristics in regards of length, amplitude, phase, which means you need to update your cycle analysis. So we always, and we should never look more into the future as to the next 1 or 2 major swings or turning points, and then read the time information. Not doing price projections here. Okay, so I think you are aware of that, and I will switch to a price chart in a second, by the way, to really see how it worked out, and give some comments on trading, not recommendations on trading, but some how you could use also this on your trading setup here. So I just zoom out a little bit here, the chart, because there's another thing you need to be aware of this analysis. Okay, so the whole data set which was used here for this analysis is just following, yeah, a simple uptrend. So our cycle projection is always using a detrended version of the data you have uploaded here or analyzed here. So if we now read the cycle swing, we always need to read our cycle projection, again, the trend information, because the trend information has been taken out for the cycle analysis. Yeah. So, and this 2-hour data set we analyzed here, and just to keep it simple this way, is just following this uptrend here. So we know that from a trend perspective, there is an intact uptrend on the 2-hour chart. So therefore I said, be careful now, even though we might have a down projection. I mean, taking down projection and uptrends is anyhow a risky setup, but this is up to you how you take this analysis. But in this kind of setup, it's more promising to look, if we are in an uptrend, when is the next cycle swing taking place in the direction of the main trend. This is, I mean, this is basic knowledge. That's no secret here. But this is the simple setup which is most promising. So therefore, I just highlight you should be aware of what's the overarching trend you're doing this analysis, because if you zoom in, yeah, the cycle projection we are talking about here. Sorry, let me make this a little bit larger here. So this cycle projection we are seeing here is a detrended version of the cycle. So this down move here, you need to be careful anyhow with down moves in uptrends. Often show up as sideways movements, so might be a sideways movement, and that's the point we might look out. So the question, how do we read this analysis? This is the point I wanted to make out here is, so the reading here is that from this period here, this is where we would expect from a timing perspective the next upswing to might start in the Dow Jones 2 hours data set. Which might then move into this period here. I mean, we never know exactly where the top will then take place. But as we are in an uptrend, this is the important information we take from this cycle analysis. And again, this cycle analysis was done mid-April. So by mid of April, and it was live, it was here on the channel. So please review this. This was done here. So this would be the lookout for the cycle analysis. Maybe wait until, and I think the projection here was 27th of April, and then an up move into between the 10th and 17th of May. Maybe then at least the cyclic momentum would fade away. So you could take this opportunity then to look for an up move in the market during this time. So now you have your time information. This is how you use the cycle analysis. We don't know what the price behavior and the magnitude of these moves, and if the trend or the trend changes or the overarching trend will change the behavior. So there are lots of parameters which are unknown, but this is the basic setting you would use now in your additional market analysis. So why could we use this? Before we switch now to the price chart, you can also check back this behavior in the past based on these two cycles here. And I will just switch so we can plot now this. Oops. I've just switched how this composite cycle is plotted, so not as an overlay. I just put it now besides the chart here to highlight some important phases, because the timing, you also should check if this timing worked out in the past. So then you know that these two cycles and the timing in the trend would have worked out. So therefore, let me just highlight these upswing phases on this chart here. So where these projections took place. So here we have the key upswing from here to here. Was this upswing here? Then we had another major upswing from here to here, which is this upswing in the market. Maybe a smaller one, which was expected then here, which is this upswing here. We could also count this one here from, I think, from here to here. So these are the exact same behavior in the past. We could also use this here from here to here. Yeah, and this is how you check this in the past, and you see that almost every up cycle swing was going in alignment with major upswings in the markets, just following the trend. So, I mean, it would be very hard to trade the downswings here, even if the cycle projection might looking from there now into the past might look have good. But that's why I showed you how to read our analysis from mid-April. So therefore, finally now let's now move into how to use this on the price chart. Okay, so I will now close our cycle analysis as we will look on the price chart now for a possible start of the next upswing, 28, 27 April into the period of 13 May. So therefore now let's switch to the price chart and see how this analysis, which we did on the 12th of April live here on this channel, would have performed, and how to use this kind of data set. So this is you can use whatever charting application. I just use TradingView as it's free and gives us a lot of opportunities here. So this is the 2-hour Dow Jones price chart. The 12th April was here at this point in time. So this is where we did the analysis. And now we would have awaited until the 27th, 28th of April, which is exactly here, where our cycles indicated us that the next upswing will start. And to highlight this, we did the analysis on the 12th. So here we have been running the live cycle analysis, and our cycle analysis told us that at this point in time here, 28th of May, so here we would expect the next upswing to start into the period of to last somewhere here, so here to end. So this was the projection we would have waited for. I mean, you can't trade pure cycles here. That's the important point. But how do we use this information now? So you never trade time. So if you're in the markets, and now this is not the topic now giving you trade recommendations, but it's how you transfer the cycle analysis to your price charts. I think there are some hints we can give you here, because you have this timing indication. Now, the first thing is now you want to trade price, not time. So cycle analysis gives you timing information, but if you want to put this into trading topics, you trade price, you don't trade time. Okay, so that's the first topic here. So how to trade price with this timing information. The first topic, which might not be known so much, is if you know the dominant cycle length, which is 85, 84, if you review the video, you can use this information to fine-tune every technical indicator out there. Because if you put a technical indicator on the chart, and let's use a standard relative strength index, for example, you know each of this technical indicator requires you a parameter with a length setting. You know, if you open a standard RSI indicator, it will request and you maybe are not aware of that, every of these indicators come with the requirement of a length setting. Have you ever thought about what to put in this length setting for this indicator? I think even no one questions what to put there. Or do you really have a method how to adjust the length setting? Not curve fitting into the past trading signals. This is easy and will not help you anyway. So often I see a lot of colleagues now doing some trade system optimization, back testing, curve fitting against the best parameter setting. That's will not work in the future. Overfitting is good for statistics, but not for the right side of the chart anyhow. So what to do with the length setting? Use the dominant cycle length, because that's the market vibration. The dominant cycle which has the most impact on price movement, that's why we call it dominance, so the highest strength rating, explains the most price movements of this data set. So therefore, if you tune whatever technical indicator, it doesn't matter. So most technical indicators require you to give them a length parameter setting. If you use a harmonic of this dominant cycle, your technical indicator which will show up much more better signals on your price charts. Not so much whipsaws trades, a clearer entry and exit signals. So if you have not known, this is really how you put the first cycle information about this 85 onto your technical price chart. Now every indicator will get better. Instead of using the standard length of 14 or whatever here, use an harmonic of the dominant cycle. If you have watched Ray's scientific videos, if you read Dewey's articles, there's a lot of information on how to use harmonics. Even in the cycle analyzer, we have an harmonic module which shows you the harmonic related cycles which are also there. But the simplest rule set you can use is use half of the dominant cycle, so an harmonic of 2, and put this as length setting for whatever technical indicator. So the dominant cycle length is 84 on the 2-hour chart. So we will use 42 for whatever technical indicator. Okay, that's it. Just for example, I would recommend there is a better RSI indicator here, which is a smooth version. It's free, it's open source, so it's there for everyone. Just look it up on your own. It's a cyclic smoothed indicator on the RSI, which is there to use. But anyhow, it's open, it's free. It's just a RSI indicator I use much more, and I will do the same. Adjust it to half of the dominant cycle here. So what we see here now on the chart on the bottom is now a standard technical indicator. And this now, the combination of whatever technical information you use, this is just an example. And I don't recommend this exact setup to use. I will just explain how it works, and you can fit it to your technical setup you are using here. So this is just an educational learning example here. So I have now tuned my technical indicator to the length of the dominant cycle, and I know the points in time to look out very closely on technical analysis where the next upswing could happen. You know, this is what we had two informations from the cycles. We have the time slots, 27, 28 of April into the 10th, 11th, 12th of May, where we would expect the next upswing in the uptrend of the current market. And we have second, the dominant cycle of 84, which allowed us to optimize our technical indicator. Now we can zoom into the chart even more here. And this is the period we are looking for here. So this is the 27th of April, 28th, where you now see, and whatever technical indicator setup you use, you can use Fibonacci price levels, other technical indicators, you know better what works for you. And now here we clearly see when to trust the indicator signals, because normally you don't know which signal to use. This one here, this one here, this one here. That's always the problem when you use your technical indicators. You never know which of these signals will work out best. You always know after the fact, but we now combine this with the information that we know from the cycles. We should look out for signals happening around the 27th, 28th of May. So which is this one here and this one here. And by the way, this is also a diverged signal here, which makes it even more powerful here. So at this point in time, now we have two signals from our technical indicator, which are tuned to the dominant market here, exactly at the projected time window when from the composite cycle we would expect the market to bottom. So this would be then and you could add then additional trade setups here, our entry expecting the next up move here. So now we see that the market pushed up very strongly after this signal, and you see that until this point in time, so here we did the analysis, until this point in time the market just moved sideways. So but boom, at this point in time here where our composite cycle said now the next cyclic energy will flow into the market from the cycles and push them higher, kicked in. So it projected the window here to top between the 13s. So if we just use it blindly, this was the projected window to see the top here. But now the static component comes into play. I mean, between the 27th and the 13th of May, there are 2 or 3 weeks in between. So you would anyhow have updated your cycle analysis during this period in time here. As I said, you never treat this analysis as a static one here. So said that, as we know that the dominant cycle has not changed, our technical indicator, which was also tuned to the dominant cycle, gave us an exit signal here anyhow, which was exactly here at this point in time. So from being in alignment with the price and dominant cycle, this is where the combination of whatever technical analysis you use, so you need to find your setup, your technical analysis, but as you see now, this indicator here, and this is just the standard RSI version here, gives you now much more reliable exit signals or sell signals, however, than the standard reading of this indicator, which allows you to sort out the false signals from the signals you would follow. So that's how we use cycle analysis. We don't trade pure cycle signals in the markets anyhow. So if you just look out for, there the cycle top, but no, the market is not topping and there are cycles not, that's anyhow, you should never do based on cycle analysis. But and this is hopefully what you take away from this analysis. Please review the mid-April session where we showcased exactly this cycle. So we showed you this cycle here for free in the Cycles TV. So therefore, anyhow, I think it's most important to see here. And I just wanted to update the lessons learned, how to use this information. And this was just an example to show you how you can use it. So don't take this as a trade setup recommendation. It just shows you how you combine cycle analysis with technical analysis. And you anyhow, if you use this to improve your market analysis skills, which then feeds into your whatever risk situation, money management situation, which can help you make much more reliable decisions than acting in this market environment, whatever your role in this market environment is. Okay, so this was a very, very long session, but for me it was very important to give lots more information on how the intraday analysis should be used in the live markets. So therefore, I wanted to bring this across and to sum it up. And the second topic was to show you that with the correct intraday aggregation we have now on the time axis, which we didn't have before, you are now able to spot these areas of cycle trend changes very easily from the cycle scanner, which might not be required for everyone. So therefore, we still keep the basic version. But if you're not interested in intraday analysis, you just stick with daily, weekly, monthly, you're all fine. You don't need that. But if you do intraday analysis on whatever data set, and we need to put more maintenance, more checks in, we need to be able to plot different bar sizes, a trading session, make this configurable. So there's much more involved in making this available and doing correct projections on the price chart. And you even know that you can export your intraday analysis then to your Excel chart or save it on your computer and push it to the wall that you say, okay, this is my intraday forecast. So whatever you do with it. Okay, so let me check your questions. So if you have any question on this intraday topic, just rush them in before I will go to topic 2 and 3 of the session here. So I see, Mike, you have been brought up the first question here. What is the smallest fraction of a dominant cycle number you would consider for setting a technical indicator? The smallest fraction. So in this case, I said use the 84, yeah, and use the harmonic of 2. Yeah, I would. The smallest fraction, I would never go below a harmonic of 3 or 4. So don't go lower than that. So that's the key advice. So never higher than the fourth harmonic in this case, because it will be too small, or then at least you will get too many whipsaw signals on the chart again, which will not help you. So I like the second harmonic to use then, or the half of the dominant cycle, maybe the third of the dominant cycle, but not much more. Just also take into account your personal your personal time frame for possible actions in the markets. So if you use very small time frame, then you might able to go lower, but I would not recommend that. Okay, how did you plot the underlying trend? I just draw it on the chart, so there was no indicator or setting for that. I just draw it with a brush on the chart, but I think it was visible with an eye. So just make it here larger again, so that you clearly see. Yeah, so this is an uptrend in the market. So if you take action in this market, which is clearly in a running uptrend, you should know your risk in long and short positions in this trend here. But I did not plot it. I just draw it on the chart. But that's the important point to take away in regards to trend analysis is the cycle analysis is a detrended analysis of the data set. So therefore, the cycle analysis takes out any trend in your data set. So therefore, you are required to visit the data set, or it's required that you are aware of the trend, the underlying trend of the data set you're analyzing, because the cycle analyzer will not take care of the trend information. It will just filter out the trend for you. You just need to know that. Therefore, the cycle projection is always a detrended version of your data set, also looking into the future. Okay, so but no plotting function. It's just the upgrade. Okay, so yeah, the new scanner, that's one feature where the analyst upgrade now takes place. You remember in the past, or just until last week, we have not focused on exact time frame projections into the future, because any intraday data sets needs to have the market session in place, the non-trading sessions into account to make correct projections. So it's much more harder to deal with these intraday data sets. Therefore, we added this configuration now, which allows you to configure your individual trading session for the data set you're analyzing. And there are no restrictions. And yes, this was not possible before. Now we can take more control of the intraday projection, but that's just one feature. Yeah. So this is not everything. There are more features. I will review feature by feature here in our weekly session. I just can run here for 2 or 3 hours, so bear with me. Next week, I will highlight another new feature. That's just one feature, that the intraday projection is now much more accurate on that. Okay. So then let's get to the other two topics I just want to push out before we move into the end, or if we can also will come back to your other questions. Because I always want to highlight, and that's I said this in the early days, our ideas section is the place for you as a member or just as a visitor to reach out for the ideas, read some ideas, and if you're interested, discuss. And there's an interesting latest one I just want to recommend to everyone. First of all, because the cycle analysis, which is done here on Bitcoin, is interesting. I mean, we reviewed Bitcoin sometimes here in this series, and I think now we have this idea in the section which was done by Mark. So thank you, Mark, for pushing out this analysis. And you did anyhow moved back into April. So what you see here is the projection which was done back in April, which predicted or showed that the top already happened here around 60K in the beginning of March already. We even saw the push to 63,000, but then the huge drop here was projected because the light blue here data was not known by the analyst. I mean, this idea was pushed after the fact, but I think we can learn something from this idea because the cycle analysis is very clever, and therefore I would recommend you that you also read the report Mark did in addition to this cycle analysis. So you can go to this interactive browser here. So even if you're not a member, so you can check the analysis, go more in it. And now Mark posted his report on this analysis in our forum section. So if you click on this link, which is included in the idea, it will bring you to our forum. And you see that Mark Jackson posted an attachment here, which I don't do often recommendation on zip files or attachments, but this one can be opened because there's a short Word document in it or PDF document. I can't show you, but there is a PDF document here in this file where Mark did 3 to 4 cycle analysis on Bitcoin, raised some questions, which he did not answer, but also ask you to maybe put some answers in here. But Mark, my comment in general is and you use different methods, to pull up the Bitcoin cycle projection, which is the first thing which is valuable for you. So you can revisit some ideas how to do cycle projection. And the second point is, Mark, all your projections showed that you would expect Bitcoin down move. So I think this is always important when you use different methods on cycle analysis and they more or less tell you the same story. You can trust this story more and more if they come to the same ending. I mean, now we are all interested maybe when the bottom might take place. So therefore, and Mark, you even added a lot of great analysis here on some special cycles, the 29 days and the 290 days cycle, which you compared then to the synodic period of the moon, and you did some analysis here. So we won't have the time in this live session to dig into it, but I highly recommend it for you. Follow up in the forum, check the idea. It's free for you out there. It's great content. Thanks for bringing up this idea, Mark. I will also answer in the forum, so you will get my answer on your topic, Mark, here. Everyone who brings up these great ideas will receive some answers here. So that's the first topic here. And the third one, just short, I introduced in the beginning here, is around the idea. I shared this idea first also in February, March, where I told you that analyzing sentiment data is also very important for cycle analysis. So often you don't need the raw price information or the raw price data to do cycle analysis. If you have related data sets which tells you where these data sets tell you something about the sentiment in the underlying data, which is much more promising. And I did this with the so-called National Association of Professional Investment Advisors, or maybe I've explained it, the NAIIM Exposure Index, which is reported by professional investment managers once a week. So they report their exposure against the markets, if they are long or leveraged or short or neutral against the market, which gives an index every week, how the professionals are currently seeing the market behavior. And you can analyze if there are cycles in their behavior, which obviously are. If you just read the analysis and the idea, which is still there in the public ideas section, we saw that the high, or the expected high in the professional bullish sentiment should come to an end, at March. I have updated this data set, so I just wanted to remind you this data is now updated to the latest point, so you can update your own cycle analysis on this data set. It's there in the cycle scanner. And second, this is always interesting if you review this kind of analysis. We projected that at this point in time here, that the exposure will go down, which means they will reduce their bullishness, which obviously also exactly happened, as I show here just on the chart, because the light blue is the new data after we did the projection. So the exposure has moved down exactly as projected here. There's some, if we do some market analysis, it's interesting here as the professional investment advisors are reducing their investments since March. So they are moving out, still uptrending market here, their positions. And we still see an uptrending market here, which I will then leave up to you. So there's other forces, not just the professional money managers, which are driving this market right now, which makes it more risky anyhow. But I just want to recall this data set for you. It's updated with fresh data, so you can also put your updated cycle analysis on that. Okay, so we are running, my God, an hour approximately, so I need to close here. So I will just check some questions out of the session to give you some answers on that. So I will just pull up your questions. Okay, so I'll now bring in your questions. I need to allow that you see the question. Oh, just a second. Why is it here? Okay, so Bernard, I have a question about the amplitude numbers from the cycle table of the cycle fund. For example, S&P 500 cycle, 31 days, amplitude 22. Is the amplitude average from the beginning of cycle study? Yes, exactly. So the amplitude which is shown in the table is the average amplitude in the in-sample period of this data set. So the amplitude for sure does not mean it's constant. So there might be times when you have a higher amplitude and there might be times with a lower amplitude, but this is the average amplitude of the in-sample period. Therefore, you could, if you need, the Bartels score then tells you if the cycle has been there in the full in-sample period. So the higher the Bartels value, then the more you have the information that over the whole period also the cycle was there. Yes, it's the average amplitude. If you lower the in-sample period, then you will see, or if you limit the in-sample period just to a time fraction in the past, you will see just if the amplitude of this cycle would be different there. So you can even make fragmented analysis and check amplitude or even length paddings. But your assumption is correct. That's the average amplitude. Mike, can you post a link with the attachment you referenced? Yes, sure. I will just push it into the chat section. That's a good idea. I will just pull it up from the ideas again. So I will first put the link to the idea, link to BTC idea. So here's the link to the idea. If you, by the way, click then the read more button for this idea, or click the show button of this idea, it will bring you up to the forum here. And you can then also download a forum with BTC report. Download. That's here. So that's part of the community. So that's not a report of the foundation. That's part of our membership content. But there you can cross-check what I just referenced. Okay. Mike, again, is it possible at some point to overlap or superimpose the cycle analyzer on top of the moon phase to create standard cross-reference? Yeah, sure. I mean, planetary cycles or planetary movements is an important aspect in cycle analysis. We just need to separate these different areas of cycle analysis. So if we combine everything and throw it into the mix, planetary cycles, digital signal processing, a technical analysis, then it gets very complicated, and everyone needs to find the own special area. So therefore, we will set up different areas in the foundation where these different knowledge areas will get their home. So we started with the market analysis with the cycle analyzer, which is mainly based on digital signal processing, which is a key data analysis topic where Dewey also relied on in Hurst. And Ray started now with the scientific analysis of cycles, and we have other colleagues also in our board, and which will then continue with other knowledge areas. So, Mike, yes, at some point it will show up as a combined story. We just need to take it step by step, because otherwise everything will get very complicated if we put this on the mix. But I think you are in this topic anyhow, and yes. Planetary movements are important as they somehow influence our life here on Earth anyhow. It's just not digital signal processing. Therefore, I'm a little bit quiet here on this Monday channel as we are talking about digital signal processing with the cycle analyzer mainly here. Okay. Yeah, Mark is also there. So I've also seen first questions showing up here from you. So therefore, maybe some good idea to close the session for today. As I have introduced last week, we have now brought to you lots of upgrades in this analysis. We did some changes in the configuration because we realized and we learned not every feature is required by everyone, but every feature needs a lot of maintenance and you want to have accurate outputs. So therefore, we added lots of more features, which requires much of more maintenance and also checks, so to secure that what you get is correct. But then we differentiated also now in 2 membership structures, which allows you to decide what you really need. So therefore, I highlighted today the intraday time feature, which is one out of different sets. Mark is also there, which might help you in case you have questions about the changes now. Mark will help you to get this more understood if there are topics related to that. You have Mark's contact details now shown here on the channel. In every week, as you know what we're doing here, I will feature some additional topics, not to feature the foundation, and hopefully you get it also today, to also give you content you can learn something. I hope you take away some ideas out of today's sessions, which I try to give you some hints how to use the cycle analysis. So we revisit the Dow Jones 2-hour chart, how to read the cycle analysis. So I hope you liked today's session. So next week, there's something new. There's a new data set, a new time for cycle analysis. So thank you for staying with me again this week. Love to see you again next week. So stay safe, stay healthy, and we will see us next week here at the Foundation. Thanks for joining.
Hello, I'm Dr. Richard Smith, the Chairman and Executive Director of the Foundation for the Study of Cycles. I hope you enjoyed our presentation. I'd like to ask that if you're not a member of the FSC, that you consider joining so that we may continue to bring you high quality cycles analysis research and programs like this. If you're already a member, of course, thank you. Would you please consider making a donation to the FSC? We are a not-for-profit organization, and your donations and membership fees are tax deductible. Every dollar that we bring in goes to further the vision of our founder, Edward R. Dewey. Together, we can make a real difference and bring these critical reports and analyses to the next generation. Thank you for standing with the FSC, and see you next time.